So welcome everyone, I'm Config Jason. If you have been following along, then you may have an idea of how to actually get started in crypto and what are the first considerations you have to make. You may also know how some of the most obvious grifters in the space appear. So now it's time to go back and talk a bit about the market. And today's topic is macroeconomics or just macro. Just going to make a short disclaimer here at the start of the video. I am aware of the amount of macro larps there are on Twitter and everywhere else. I'm not here to pretend I know much myself, but I give you some of the most basic ways to view the economy to know what could be next for risk-on markets, stocks and crypto basically. This video is nothing near exhaustive, so I recommend you to search up anything on trusted websites like Investopedia whenever you find something that you don't know. I'd say that makes up enough of an intro, so I'll get straight to the topic. And the first point I wanted to cover is to please don't trade anything related to macro on the lower time frame since volatility might move price in both directions. Forget about that basically forever. Observing though is a different thing. I've said more than once that observing every move is beneficial. Staying as a spectator and knowing to sit on your hands might even teach you a lesson about patience, in my opinion. So now that you at least will try to not trade macro events on low time frames, you need to know what to pay attention to, or in other words, which are the most relevant releases. And to gather a broad idea, you don't need many to be honest. And in the end, maybe you're even wondering why I'm even thinking that the macro video is important to your goal, which is progressing within crypto. And I have to say, in first place, crypto is correlated, and it has been since 2017 for a few reasons, which include hedge funds and VCs applying sentiment changes in stocks to crypto, or because crypto as a nature is liquid, if it's not shitcoins, and it's a risk-on asset, as I said before. This now argues the idea why you need to have some basic level knowledge about the bigger picture that involves crypto and the global economy. So nonetheless, I get back to some of the most important releases here applying to the US, which is the economy that drives the world currently. Starting with the Consumer Price Index, or CPI. Simply said, it measures inflation based on what consumers pay to buy goods or services. And for optimal economic growth, you want to see around 2% year over year. Basically, anything considerably higher puts us into an inflationary period, and much below is recession territory. To conclude with this point, I also eventually pay attention to the Producer Price Index, or PPI, which is now inflation taking into account prices at which producers of commodities sell. Next, the job market is another useful data point. This includes checking the unemployment rate, non-farm payrolls, job openings. And the first two affect price the most in the short term, and usually higher inflation leads to less unemployment and vice versa. Numbers taken from a random print may not make sense, so please check longer term trends, and this applies to every metric. And then I have on the list Federal Open Market Committee meetings, or FOMC, in which monetary policies like increasing or decreasing interest rates or buying and selling financial assets are discussed with the press. I don't really recommend watching them unless you don't have anything else to do. Rather do this than FOMO into your next trade. Before leaving you with a little tip about checking macro data, I want to say that the approach that most people take with it is somewhat wrong. I have no knowledge. If you have no knowledge, and neither do I extensively, don't get obsessed with this. Check once and forget for a while, especially if the market engine is working, which results in being a bullish period of time. In addition, as I said at the start of the video, don't trade this on the minute chart either, since you will get chopped regardless of the direction you picked. So in conclusion, I use everything I said in this video as a confluence. So keyword here, confluence, not main indicator or anything, for your directional bias for the next 6 months to 1 year. And now that I mentioned all of this important info, basically the metrics that you should check and some of the tips I usually apply when thinking about macro, it's time to show you how to check this data, as I said before. And I use Trading Economics. It's a calendar, you can just search it up. It will show you the first result. And from here, you just have to go to countries, clear, and just select the US. Click Save, and you will see they have different impact. Uh, they, And you will see they have different impact levels. You can also set it to maybe 2 stars at least. The ones with 3 stars are some of the ones I mentioned, and not even all of the 3 star ones are relevant for crypto. For example, building permits makes no sense. Retail sales makes no sense either. It's just to check the bigger picture. And then you can click on inflation rate or CPI. And you can see here the chart for any given time frame. 1 year, 5 years, 10 years. You can even go to maximum. And that's all what involves trading economics. They have more features like searching for inflation rates for different countries, etc. But I don't really use the rest of them. And to finally conclude with the video, if you like the economic topic, you can search for How the Economic Machine Works by Ray Dalio, which is this first video. I watched it myself, I liked it, it explains the basics of economy, and it's pretty straightforward and easy to understand. That's all I had to say. Hope you learned something. Don't forget to subscribe, like, and all that wholesome stuff, as I like to say. If you have any feedback or concerns, don't hesitate to comment or DM me. And see you in the next one.